The headlines will make you believe that World War III is here and you should be dumping everything that you have, running away as far as possible, and keeping useless fiat. This, for me, is an indicator of a massive wealth transfer, a wealth transfer that will make us absolutely, it's going to make us a lot of money in the long term. In the short term, it requires, a steel mentality, big balls. Of course, welcome back to the channel, guys. I am at the heart of the conflict. I remain safe with my family, with my friends. Of course, I'm not going anywhere until we see a better place to go. And I don't think there's any other better place to go globally than where I am. So I'm going to stay put. But let's go back to the video. So the headline says, World War III is here. You should be absolutely jumping out of your, investments and going into cash. And I believe we are missing the great rotation. So last year, everybody was in gold. Everybody was talking about precious metals. All of a sudden, as we predicted here, everybody's now talking about gold, natural gas and silver. But there has been a capital rotation rather than a concentrated bear market outside of crypto. Crypto is the only place where this bear market is showing up. And what gives us an indication is this 10-year US yield, right? So you have a media that's telling you consistently, panic sell, hiding cash, but you shouldn't do that. They're selling you the fear and you're looking at the data. If you're specifically looking at the data, we are not fully in a bear market when it comes to the stock market, right? Far from it. We need a stock market to actually retrace even for a healthy correction in BTC. But what you're seeing as well is the dollar index running very hard. Okay. If your 401k is crowded into big tech, which is what's been happening, you're already losing money. Why? Because the yield curve is basically bull flattening. Now, you don't have to worry about exactly how this works, but what you have is you've basically got bull steepener, bear steepener, bull flattener, bear flattener. These are specific terms used in the stock market. And we don't have to worry about that for now in terms of explaining how this works. But also you need to think about stagflation. So last year, it should have been stop chasing techs and financials and start watching gold, energy, and utilities. Of course, the opportunity is where smart money is not leaving, but rotating into other things driven by largely these macro factors. So here's what I see, right? I haven't seen the picture of Bitcoin change for me in terms of where it bottoms and in terms of where we are right now. I've been calling this bear market for a long time, saying it's a bear market, but the opportunities will come even more. So with that being said, guys, Bitcoin has been running, altcoins have been running. What I would say is pay attention to the stock market. And if these things come, these prices become even more available, right? You've got, for example, you've got Hyperliquid at $30. You should be buying that at $9, $10 maximum or minimum. You got Cantor not moving down regardless of what happens. You've got Bitensa TAO going all the way back up to almost $200. So in terms of the overall Neo protocol is well above $1 now, 138. So the market has kind of like literally run back a bit, but I'm not buying any of this. Ondo's a good watch at 25 cents, but we need it sub 20 cents if we're going to make decent amount of money. So right now, yes, we are justified to keep some stable coins on the sides. Of course, as always, you've got to be prepared to be patient. If the market moves 10% against you to the upside, don't invalidate your thesis. You got to live by your actual thesis and say to yourself, look, I am happy and comfortable to be holding what I need to hold in terms of what happens overall to the market. But overall, the panic is that the US government, for the first time since 2002, is absolutely not in a position, or in fact, they're in negative spending. And that's key, right? The money printers don't need to wait for too long to address this situation, in my opinion. So government spending is actually decelerating. And if you look at of course, big tech acts as an extension of government liquidity like the Mag 7, this is where the stock market can come under pressure. Fear still remains 20. The war continues to go on. In my opinion, 48,000 will be the bottom if we get out of this range, either to the upside or to the downside. Whatever comes next will be a massive opportunity. So in my opinion, I'm not panicking right now about these headlines. In fact, what I'm seeing is probably one of the greatest wealth transfers in our history. So stay invested, into the market, pay attention to what's going on, and strike when you need to strike. But right now, I do remain overwhelmingly in cash with some exposures into projects that I'm probably going to hold for years. All right, guys, have a lovely day. Of course, thank you for all those that send me the love and appreciation into what I do and checked on my safety. You are well appreciated. I'm doing very well, and I see this as a major opportunity to go into the next level. Take care, guys. Stay smart, and I'll catch you on the next one.